morning, good afternoon, or good evening, wherever you're joining us from. Multifamily Investor Nation. This is our regularly scheduled Tuesday webinar. Good morning from Kansas, Kurt. Thank you for being here. He knows the process. Go ahead and tell me where you are joining from in the chat box. I just like to get a good feel for what countries we have on and what locations. Hawaii, excellent. Good morning to you. I believe it would be your morning time. Yeah. Um, Maryland, excellent. Columbia, Vancouver, BC, Canada's in the house, New Jersey. Let's see here. PR, I'm guessing, is that Puerto Rico, New York, Denver. We've got people from all over the place. Um, Great day. Excited to be here. Thank you. Thank you. Indiana, New York. Awesome. Yes to Puerto Rico. Grateful to have you here. Wonderful. Well, without further ado, let's get started. Fort Worth, Texas. All righty. We are chatting about the deal process from underwriting to closing for an apartment syndication deal. This will be recorded, so you can always go back and rewatch it. We'll post it again. I have a hard stop today at 11:30, so I'm going to go for the next maybe 15 or so minutes, but this time is meant for all of you joining us. So if you have specific questions, put them in the chat box, put them in the Q&A box. I will do my best to follow along and go from there. The one announcement I want to make sure to highlight today is we will be hosting an in-person live event, the first Multifamily Investor Nation live event in Charlotte, North Carolina. Hannah, thank you. You beat me to it. She has just posted the link to that conference into the chat box. So log on now, buy your ticket to it. Seats are filling up fast. Use the promo code webinar to get your discount. We are going to have a tremendous lineup of speakers. We've got some awesome special guests lined up to come and be keynote speakers. These are public figures, people that you will certainly know who they are. So we are excited to be hosting this and looking forward to seeing all of you there. That is my only announcement for the day. Make sure you click that link, go buy your ticket, join us. We'll see you in person in Charlotte in June. With that being said, today it's all about from the process of underwriting to closing. Excuse me, the pollen here in the Southeast US is pretty bad. I almost had to sneeze there. And without further ado, let's dive into it. Again, pause me at any point in time, ask me questions. I'll do my best to follow along and kind of keep things going. There is no material that is being shared. We are just going through some of the major notes. And so get your notebook out, sit back, turn your phone down, just listen and jot your notes down. So from the process of underwriting to closing, what are the key pieces to follow in that process to help you ultimately close deals and buy them and put investment opportunities out there? We kind of have a 5-step process that we like to follow, and we'll get into the first step, which is really qualifying the deal. And so what we mean by qualifying the deal is making sure that, number one, the location checks the box. So whatever sort of MSA locations that you're going after, whatever sort of economic indicators that you use, job growth, population growth, any other demographic information pieces like household income, looking at the different comps in the market for what price per door other like kind properties traded at, as well as looking at any sort of home sales or new developments in the area. So, qualifying the deal is number one. It will help you identify deals that pass the initial qualification to then move on to the next step in the process. Again, if you think about a triangle, an upside down triangle, right? You want to have as much deal flow in the top of your funnel as you can. And as quickly as possible, you want to squeeze that deal flow into just the deals that meet your standard or meet your criteria. So, having very specific pieces of criteria is going to help you filter out the noise. Looking at investment properties, or more specifically, multifamily properties, there's a ton of deal flow out there. Brokers, owners, your friends and family, people are sending deals all the time. And so, as operators, as syndicators, we need to be very diligent about what we want to even spend the time to look at. So if you get the greatest deal in the world, but it is located um, in San Francisco, California, and you have no reason to invest in that market, then you should never even open that deal or look at it or spend 1 second thinking about it. You should immediately delete it. So, qualifying the deal is a really important first step in the process to make sure that you can take all of the deal flow you get and just move on whatever meets it to that next step in the process. So again, qualifying the deal, you want to look at the specific market you're buying in, the specific sub market, the economic indicators to that market, the demographic indicators for that market, and then sales comps and rent comps for that property. So a lot to do within it, within that first step, but really once you know those pieces for the specific markets you're looking at, you can pretty quickly qualify a deal if it meets that criteria for you. And then you move on to step two, which is all about running the numbers. So, running the numbers involves getting the historical financials from the seller, a T12 or a rent roll, and then quickly running the numbers to see if it passes your initial underwriting test. What I encourage people to do is have like a 15 to 30-minute process where you can pull down the T12 and the rent roll from the seller. You can input the data into your underwriting model and do an initial qualification. Again, if it does not initially qualify based on a quick test of it, you'll learn that spending more time trying to finagle something is not going to be beneficial. And so, if you don't know the underwriting process very well, go back and watch our other underwriting videos to learn it. You should be able to quickly run the numbers in 15 to 30 minutes for any deal that you're looking at and qualify that from um, an initial numbers test. And so, again, if we're thinking about the process here, step one, qualify the deal. Step two, check the numbers real quick. If the numbers don't even work on a quick test, then we are not going to move on to step three, which is touring the asset. So, if the numbers do work, then we go and tour the asset. That is step three. So touring the asset is is a time to initially lay eyes on the property, meet with the broker, build that relationship. It's not a time to complete full due diligence. It's not a time to scope drain lines or climb on roofs to check out useful life for shingles or look at deferred maintenance. It's really a chance to, again, meet with the broker, build that relationship, and also set eyes on the asset. You should be able to get a good idea of, is this property maintained nicely or is it not? Do we expect, if it's not, to have a higher deferred maintenance capex to invest day one? Are most of the areas in pretty good working condition? And you kind of do your first glance at the property. Again, kind of inspect what you expect. So if this is a newly built property, you would expect that there's no deferred maintenance on the property. If it's a property built in 1960, you probably have the assumption already going in that there's going to be some deferred maintenance that needs to be checked in on. And it's going to give you an idea for your next step, step four, the full underwriting and deal review. So once you've qualified the deal initially, you've run the quick numbers on it, you've toured the asset, now you do your full blown underwriting, which really involves pulling in all of the rent comps, developing a pro forma for that asset, putting together your business plan for that asset, identifying your specific capital improvement plan or deferred maintenance business plan, and really going through with a fine tooth comb on all of the historical financials and all of your go forward financial plans. At the same time, you're underwriting the deal, you should also be working with your property management company to put together a pro forma of how the property will be managed, what type of income expectations you should have, what type of expense expectations you should have, and marrying those two pieces of information, the numbers you put together and the numbers that the manager put together, to build your final underwriting model. Once you get into that final underwriting model is really where you should be testing the strength of the deal and looking at different debt and equity leverage amounts, different debt interest rates, to see how this deal is going to hold up given where we're at today and where interest rates or where debt may go in the next 30 to 60 days as you continue to progress in your underwriting process for the deal. Once you go through that step four, it's really about getting the deal under contract and getting to the closing table. So that's really step five. In step four, you've fully underwritten the deal, everything is working, you put your offer in, you get it accepted, you win the bid. Step five now is get it under contract and get your due diligence to get to closing. And so within step five, you are negotiating a contract with the seller, you're working with your attorney to make edits to that purchase and sale agreement or PSA, and making sure that it's fair and favorable for the buyer and the seller. And you have your adequate timeline to complete your due diligence and to close on the property. Typically, you have 30 days due diligence, and you also have 30 days to close. Most offers today are having some sort of extension option as well. So you could have a 30-day DD period, a 30-day closing period, and a 30-day extension option if you need it. So once you get the deal under contract, you've agreed with the seller on all of the terms of the contract, you then start your due diligence process. And during due diligence, this is now the time to scope the drain lines, get a professional on the roof to inspect the useful life, checking all the major systems of the property, plumbing, electrical, parking lot, um, any sort of landscape deferred maintenance issues that could be causing um, unnecessary erosion or landscaping challenges where you may have too many bugs on a certain location of the property and they are hurting the roof in the northwest corner of the property, or getting into the nitty gritties of the property physically, as well as going through the financials with a fine tooth comb, asking any questions about the seller's operation or what the current management is doing with new leases, and making sure that you're very comfortable with how the property has performed as well as how you expect it to perform. So the due diligence is really your time. You're kind of in the driver's seat, and the seller of the property is really riding alongside you, making sure that they provide everything that you need to adequately complete your due diligence. Once your due diligence is done, then it's really moving into that closing mode of working with your lender, getting all of the loan documents signed off on, getting all of the closing paperwork done and completed, making sure that you have insurance in place to close on the property, and working with your attorney, your lender, your insurance contact, as well as having the broker who is helping kind of spearhead the purchase and sale of the asset involved to make sure that all of the pieces go smoothly. So again, it's a really a 5-step process to start with a brand new deal. You want to, number one, qualify the deal. Number two, run the numbers to make sure it passes the initial kind of 15-minute quick analysis test. Go and tour the asset. Number three. Number four, once all of those pieces check out, then do your full detailed underwriting, come up with your purchase price. Step five, get the property under contract, do your due diligence, and get the property closed. We have gone through each of these individual steps in a lot more detail out there. Check us out on the YouTube channel. Use the little search functionality to look for something very specific. If you want to learn how to, qualify the deal more quickly or run the numbers quickly, look at our underwriting videos. There's a ton of information out there. So be very specific about what you want to try to get from it. With that, let me pause. We've got about 10 minutes left, so I'm going to take any questions that are in here. One of the questions in here is, what is or are your primary means to obtain rent comps? So rent comps, apartments.com is a great source for rent comps, but also nothing can replace touring comparable properties in person and actually walking through the unit and jotting down notes at like kind properties of what amenities they have, what prices they're offering, and actually doing the tour yourself. We call it mystery shopping. So that personally, going and doing that is one of the best ways to get actual comps, so you can get a feel for how this apartment looks, how it's maintained, how does this apartment compare to your apartment that you're looking at. So online is a great source. Apartments.com is a good source. Just kind of looking at the property's website to see what they're listing available units for rent at is another good source. But the absolute best source for rent comps is going in person and doing it. This recording will be coming out shortly after we finish the webinar. Let's see here. For first timers, would it be better to look for deals in your own backyard? I think you need to look for deals wherever you have the most knowledge of the market. So if that's your backyard, that might be great. Also, if you know a market because you previously lived there for 30 years, that could be another qualification. I don't think you have to live in the market you're going to buy, but it certainly helps to be on the ground and meet with brokers to get that um, relationship going. Let's see here. One other question about the rent comps and sales comps. CoStar is a great source for that information. We use that a lot. It is a paid service. So if you can pay for it and use it, that is a great source of information. One of the questions in here, how quickly do you have to do these steps? If you are brand new to multifamily investing and you've never done it, it may take you a few days to do each step. If you are experienced and you know how to do it, it could take you 10 minutes to do each step as far as qualify the deal, run the numbers quickly, go and tour the asset. Doing a full underwriting is probably going to take a couple of hours. And then, getting it under contract and doing your due diligence over a 30-day period is going to, again, take you kind of probably 30 days to do that. So I don't think there's not a set time requirement as far as a minimum or maximum goes. It's kind of whatever you need to do to make sure you get these steps done and ultimately have a great deal to buy. Typically, how many investors are in a $5 million deal? I guess the question is, just work backwards to figure that out. If you're buying a $10 million property and you need $3 million in equity to close, and your minimum investment amount is 100K, 3 million divided by 100K, you need 30 people. So that'll be different for everybody, but that's the basic math to use that. When you are submitting an LOI or initial offer, sight unseen, how do you handle that? I would basically, it's okay to submit an offer without going and touring the property or potentially running the numbers. You need to have a good idea of what you think it's worth and what you think the income and expenses would be. But you can always submit an offer and just have it be contingent on you touring the asset and also getting the actual financials. So that's something you could also do. Building relationships with brokers when you have no experience, it's very challenging. You need to be meeting with them face to face, going and touring deals with them, and just organically building that relationship. It's hard to break into the mode, but once you can buy one deal from a broker, that is a great relationship base to start from. And so it's going to be really hard. You have to call them, meet them for coffee, tour deals to do that. And, just being in front of them and being close by is going to be helpful versus if you're out of town. All right, let me switch gears here to the chat box. We've got a couple minutes left. Let's see here. There's gonna be that. initial offer, videos on. You can find more underwriting videos on our YouTube channel. So go to the MFIN YouTube channel. Hannah, thank you so much for the link. That is in there now. How do we use CoStar in this process? So we'll use CoStar to look at sales comps and rent comps and other like kind properties to the one that we are acquiring. So CoStar is a very good tool to quickly click a button and get the 20 best comparable properties to yours in a specific metro. You can still do that process without having CoStar kind of more manually using apartments.com or just using Google to figure out other apartments around yours and going and touring them and looking at them. So let me see here. Let's see here. I think if there are any more specific questions related to the deal process, I see some questions in here about more investor specific. I would say, happy to get to those if we have time. Let me just double check this chat box. I think we've gotten to most of the questions as far as this deal process goes. Again, in closing, the deal process, it's really kind of 5 steps. So qualify the deal, run the numbers, tour the asset, do your full underwriting, vetting the deal, and then get it under contract and get it to closing. So with that being said, I am needing to wrap up for today. Next week's webinar, same place, same time, 11 a.m. Eastern Standard. So we will see you next week for the next topic. This recording will be sent out. Thank you, all of you, for being here and participating in today's deal process from underwriting to closing to review. So with that, I am signing off. Have a great rest of the day and a good productive week. We will see you next week, Tuesday at 11 a.m. Eastern.